earnings. NTPC numbers coming through. 19,396 on the top line is a number that I think analysts are going to be very, very pleased with. It should be a growth, I think, definitely in double digits, about 15% higher on the top line. In terms of their profit, now here it's just a minor, it's a shade better actually than what the street was expecting. The number was close to 2,400 crores, 2,469, not bad, but it's just, compared on a Y-on-Y basis, it's a tad bit lower, 27.1% in terms of margins. Also looks good. It's an improvement from last year and pretty much in line with what we were expecting. Our poll had thrown up a number of 27.2%. We have to watch out for what the ROE, incentives, etc. look like for NTPC. And, also important to note will be what the PLFs are. 5,251 on an EBITDA level is another number that I think the street should be pleased with. Do remember that in the base quarter there was a one-off, there was a deferred tax of 450 crore odd rupees. So let's see how it's looking, but I think the stock is definitely seeing a spike higher. For now, things are looking good. Anisha, you have more color on the NTPC numbers?
No, I've not been able to open the press release or the numbers yet, but the headline numbers really look very impressive. 19,000 crores on the top line should go well with the street because we were not expecting much growth coming in from the generation. So the generation data we get month on month, and that was throwing up a number of just 1 to 2% growth. So this goes ahead to tell you that the realizations must have improved, and that comes as a positive, and maybe the company has surprised even on the generation front as well.
I can give you the generation number. It's at 19,555,000 crores, which compares with about 17,500 crores on a Y-on-Y basis. And in terms of profit actually from this generation business, it's also looking good. 4,235 crores compared with about 3,700 odd.
So clearly that means that the margins must have improved for the company on that front as well. And remember, this time around the numbers are of more significance because from 1st October is when the company has started putting in the fuel cost on the GCV basis as received basis. So that is why it is very important to see how has that impacted the numbers. Remember, the management has been saying that it will not impact the numbers much. There would not be a lot of, the numbers would be passed through any change in the fuel cost. But it looks like it has not impacted, and what management was saying has come through. In terms of the fuel cost, it has come in at 12,000 crores versus 10,600 crores earlier. But given the fact that the generation has also gone up, this should be in line. And I'll have to, of course, calculate the gross margins to figure out whether the fuel cost has really showed us any surprise or not. In terms of the finance cost, that is in line, 900 crores versus 842 crores. And the other operating income has also come in at 108 crores versus 126 crores. In fact, it has sequentially declined as well. Remember, we were working that the PLF this time were around 77% mark, below the normative mark of 85%, and that is why the incentive income might be a little less. But in terms of the headline numbers, they look really all right. In fact, better than expectations on all parameters as of now. We'll get the internals in a while, maybe in 30-40 minutes, of how the PLF levels were, what is the average realization, and what has been the GCV value. But other than that, Sumira, really healthy set of numbers coming in. Nothing to complain really as of now.